Good morning, everybody. It's Tuesday, May 28th, 5:26 a.m. Central Time. Hope you guys had a peaceful weekend. July corn futures up 3.25 at 468. July soybeans down 2.5 at 1245 and a half. July Chicago wheat up 11.75 at 709. July Kansas City wheat up 16 cents at 737.25. July spring wheat up 9.75 at 762 and a half. Those are fresh multi-month highs in the wheat market. Let's start off with Russia and wheat and what's driving this rally.
So, Russian wheat production estimates continue to decline. On Monday, well followed Russian agricultural consultancy IKAR lowered its outlook by 2.4% to 81.5 million metric tons. The firm also cut its estimate for wheat exports to 44 million metric tons. The reductions are due to recent frosts and ongoing dryness. USDA most recently estimated the crop at 88 million metric tons. Russia's forecast is warm and dry for at least another week.
I've got two maps on my screen here if you guys are watching on YouTube. The one on the left is from Marcus Weather. This is percent of normal precipitation since April 1st. And these Russian wheat areas, winter wheat areas in the south, a lot of them have seen like a third of their normal precipitation over the last 2 months. Some areas less than 20%. So this is a full-blown Russia crop scare event that we've got going on in the wheat market. We saw some gaps higher on the open last night that the wheat market attempted to drag row crops along, and that didn't really follow through into this morning. This is a big deal, of course, because Russia is projected to be and has been the last several years the world's top wheat exporter. USDA says that they'll account for 24% of all global wheat exports. Now, IKAR has this wheat export number for Russia at 44. USDA is at 52. That's a big difference. Here's the production numbers. These are your top 10 wheat producers, and I threw in both the USDA and the IKAR number, 88 for USDA, 81.5 for IKAR. That's a substantial difference. So the wheat market's rallying on Russia. How long does this last? I don't know. We're always told in the grain business, if you have a supply scare event, those are like selling or marketing opportunities. If you have like a demand-driven rally, those are rallies that are to be respected. But this thing's gone already quite a bit further than what traders have had expected, I think. The funds are still short wheat, I think, in real time. But that's without a doubt what's driving this thing.
So, a little bit more on Russia. The country continues to expand its control of domestic grain production. Pressure from the Russian government to make room for local traders caused Cargill, Viterra, and Louis Dreyfus to halt purchases of Russian grain for export last year. The top four Russian grain traders now control 75% of grain shipments from Russia's Black Sea terminals, up from 45% back in 2018. Some of the traders have direct ties to the Kremlin, which provides Russia with more control over exports. The exit of major Western grain traders from Russia has made it difficult to assess the country's crops. Russia has yet to alter its supply of grain on the world market. However, the country is trying to implement an unofficial price floor.
So it's turning into more of a state-run grain program, which is something you see in China, I guess. Maybe they're going to move to something along those lines. I think that there could be some fear, perhaps, in the back of the minds of traders regarding some sort of export curbs or restrictions. If this wheat crop is light enough in Russia and they're really worried about food inflation, I think we reported on that last week that the Russian government was concerned about domestic food inflation. They could absolutely curb exports or restrict exports or do something along those lines. We haven't heard anything to that effect yet, but if you do hear it, it would be incredibly friendly in regard to price action.
Fund traders have increased their net short position in the corn market. CFTC released weekly commitment of traders data on Friday. During the week ending May 21st, the funds were net sellers of 54,000 contracts of corn. Funds were net buyers of 14,000 contracts of soybeans, and funds were also net buyers of 3,000 contracts of SRW wheat on the week.
Premium subs, you guys have the full fund tracker charts in your email this morning. When you look across the three contracts that we track, corn, soybeans, plus SRW wheat, the net short actually increased by, I think, about 20,000 because the net short in corn increased by so much. So you still got it's not a massive net short in the corn market now. It's more of a modest net short, but funds still short across the board. The question for me, I guess, is there going to be interest in the funds actually being long these markets at any point in time, given the fundamentals? The one that would seem obvious right now would be wheat, given the Russian implication. And who knows? I mean, this data is almost a week. It is a week old now. Maybe they're net long wheat in real time. They may be close to it.
So if you guys have not checked out our premium content, you need to do so. Joe, can you tell me about some videos from last week?
A whole bunch of good stuff. Chris was on Thursday last week, I believe, prevent plant decisions. Chris talked about making prevent plant decisions and the economics behind it, the crop insurance implications, and made a free decision-making tool available. So if you guys are kind of on the fence or this is something you're going to be dealing with this year, this is a video and tool that I think you've got to get a hold of. Jim Urio was on Friday, an attempt to buy votes. We talked about government spending and in particular student loan debt forgiveness and how maybe that is an attempt to buy votes. We went through a whole bunch of macroeconomic stuff with Jim. These videos have become very, very popular. Pete Meyer was on last night. Pete's doing Sunday, or in this case, Monday, because of the holiday, pre-open weather updates for us. And Pete runs through the weather. The videos go out at 6 p.m. Central on Sundays is when they're going to be going out through June and most of July. And Pete's going to run through the weather, tell you what he thinks it means. Does it mean anything for the market? Any major changes, opening calls, that sort of thing. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. This is the best and really only way to support what we're doing here, guys. Support independent media. We don't have any sponsors. We don't have any corporate backing. Everything we do here, the podcast, YouTube, it's sponsored by you guys. So if you're a premium sub, we love you to death. If you're not, give it a shot this morning.
Severe storms and tornadoes pummeled the Great Plains and the southern region of the U.S. over the weekend. Twisters, straight line winds, and flooding were reported across the regions. The storms caused at least 19 deaths. As of Sunday, 334,000 customers in Texas, Kentucky, Missouri, Arkansas, Tennessee, and Kansas were without power. Texas Governor Greg Abbott declared a disaster declaration in about a third of the state's counties. Arkansas Governor Sarah Huckabee Sanders signed an executive order declaring a state of emergency. And then in Kentucky, 5 counties declared a state of emergency.
Is this like the third time we've had to talk about severe weather in the last 2 weeks?
I think so.
Yeah, it's pretty crazy. In terms of rainfall amounts over the weekend, the heaviest rainfall that you saw in the U.S. was, I suppose, southern Illinois, southeast Missouri, western Kentucky, parts of western Tennessee. And then there were also rains scattered throughout parts of Illinois, northeast Iowa, Wisconsin, parts of Indiana. I mean, there was rain in a lot of places. Looking at the forecast, the next 3 days for the Corn Belt are going to be mostly dry. And then you've got rains that will return during the, say, 4 and 5 day period. The rainfall amounts for Iowa in that 4 and 5 day period could be another inch of rain for a lot of areas. Looks like central and eastern Corn Belt would be a little bit drier. Look at the plains and the southern plains in particular. A lot of rain expected for Nebraska, Kansas, Oklahoma, Texas. I think people in those areas will believe it when they see it. But in any case, that's maybe good, maybe a little bit too late for the winter wheat crop. I don't know. If you guys have thoughts on that, drop them in the YouTube comments.
The U.S. and other nations are considering vaccinating workers exposed to the bird flu. The U.S. is currently in talks with a pharmaceutical company that would provide 4.8 million doses of vaccine. The vaccine would be available for poultry and dairy workers, veterinarians, and lab technicians. Europe, the U.K., and Canada are also working towards developing a vaccine. Scientists believe that continued human exposure to the virus in poultry and dairy herds could cause the virus to mutate. And if this were to happen, the virus would be able to spread more easily among humans.
What I know about the bird flu now is this. I think in the last 20 years, worldwide, there's been less than 1,000 human cases.
Yes.
Does that sound about right?
Yeah.
But mortality rate's high. It's like 50%.
Yeah, but consider all the cases that were not reported that were just plumb fine, like pink eye.
Well, there's that. And then there's also the statistic I've seen that these particular strains, there's been no human to human transmission. And that's what they're worried about, is that eventually this thing could mutate and that you will see human to human transmission. And if the number's real, if mortality rate's really 50%, then that's when it gets scary. I don't think we're to that point yet, but if it were to get to that point, this thing has wide-reaching implications beyond just the cattle market.
Yeah, for sure.
Hope we don't get to that point.
So we had a cattle on feed report come out on Friday. Cattle on feed as of May 1st were reported at 99% of year-ago levels, which was in line with the expectation of 99.1%. Placements in April were reported at 94% of year-ago levels, slightly higher than the pre-report trade estimate of 93.3%. Marketings last month were up dramatically, increasing 110% compared to last year. The trade was expecting marketings to come in at 109.5%. The report is considered neutral since the figures basically match pre-report trade estimates.
Cattle market has essentially rallied into this. This is the August live cattle chart. It's trended higher since it posted that big bottom in April. I don't really have a feel for it today, but definitely a neutral-ish report. Outside markets on Tuesday, guys. U.S. dollars off just a little bit. Stock market rather is mixed. Bonds are flat. Crude oil is up $1.26 in the July WTI at 78.97. Have a great week, guys. We'll talk to you on Wednesday.